Happy Friday. Tariffs, CPI, and Powell walk into a bar. And yes, you're confused. I'm confused, just like the market. As we kick off this Friday, that confusion spills over. 30-year fix opens up 6.94 to be exact from last week's 6.88. Yet, despite these tough days and tough couple weeks, it appears yesterday and the start of this morning, we are seeing a glimmer of hope and potentially entering into a turning point. So with that, let's jump into what drove the market this week, what our customers, our clients are asking us, and how you can be empowered to answer with the most prominent information. So let's dive into it. It was action packed from a data standpoint. From inflation, retail sales, Powell speaking, you name it, we had it all. And typically in weeks like this, where we had such positive results, especially in inflation data, we would expect to see mortgage rates lower. Same from our consumers. Yet we saw the opposite. So let's dive into it. First and foremost, inflation heavy. Consumer price index report, as well as the producer price index report. So consumer, producer, inflation data, both came back by surprise, lower than expected on both the month over month reading, as well as the year over year reading. And despite those coming in lower, we actually saw a muted response from the bond market. And on Tuesday, specifically when CPI was released, we actually saw rates go higher. At some point this week, rates were slightly over 7%. So the fact that we dipped back down, hey, we'll take it. Any move down, we're in for. And the question was, in past, when inflation data was positive, rates responded positively. Yet in this cycle, why was that not the case? And we have to acutely remember tariffs. Tariffs are still in play. And there was a lot of evolution with tariff data, specifically around the negotiations which happened last weekend in Switzerland between the US and China. Out of that, we came another 90-day pause and a reduction in tariffs from the 30 to 10%, or sorry, imports 30, exports 10. And the bond market is, hey, we've seen this story play out before. Yes, inflation has gone down, and yes, that inflation report encapsulated some of the tariffs from April, but we're still not super sold that the tariffs are going to be inflationary. So ultimately, there has been massive volatility, the fact that yes, we got a decline in inflation, but still no definitive direction around what is happening with our trade partners. The bond market is kind of taking a defensive stance, which is why we're seeing rates do the things that they do, meaning we're not seeing them come down in what would typically be bond-friendly data. Next, Jerome Powell. There was a ton of concern walking into Jerome Powell speaking yesterday. The expectation was he was going to mirror a lot of what I just mentioned. Hey, higher for longer. We don't know where this is going, which is where we see the potential turning point. He took a very, very soft tone, which was very contrarian to what we've seen, him just 2 weeks ago when he took the podium. That, hey, we're watching just as you are, and we're ready to act should that become necessary. Bond market ultimately liked it, which sparked the rally, which produced the rates that we have here now. And it's now leaving a lot of individuals, market experts, kind of pausing to say, okay, have we truly entered a turning point in what the Fed will ultimately do? That brings me to the tip of the week, where, yes, we saw headlines this week, friendly comments from Powell, inflation down, retail sales lower than expected. These would all typically be indicative of, hey, my rate should be lower, when it's the exact opposite. What we need to do in instances like this is continue to be the voice and the calm in the chaos. Chaos is prevalent everywhere. If you can show up with knowledge, experience, and calm, you can really truly make a valued impact in the consumers and clients that we interact with. As always, if you're in need of support, guidance, we're here to support you. Do not hesitate to reach out. And yes, we're trying to grow our viewership, our following. If you would do us this great favor of like, subscribe, comment, it would tremendously help us out. As always, make it a great Friday and an even greater weekend. Thank you.